Hello, everyone. Today, I'd like to discuss an offer in compromise, otherwise referred to as an OIC. So, what is an offer in compromise? Well, to put it briefly, an offer in compromise is when the IRS allows a taxpayer to pay less than the full tax debt due. Now, since there is the offer in compromise, I guess many taxpayers are probably wondering, well, why don't I know about this, or why hasn't this ever been mentioned to me before? First of all, the IRS is not going to volunteer this information to you, as they want their money up front, or they want all of their money. They're certainly not going to suggest to taxpayers that, oh, we have a program, that allows you to pay less than what you owe. Now, the offer and compromise is definitely not for everyone, and not everyone will qualify for it. For a matter of fact, in spite of what others may tell you, it's quite difficult to get approved for an offer in compromise. Let me tell you a few things about the offer in compromise. One, in my opinion, it's quite financially invasive. And what I mean by that is the forms that you will have to fill out, which is either a 433A if you're an individual, or 433B if you're a business. Those forms are going to require information from how much you pay for gas in your car on a weekly basis, to how much you're giving your children for lunch money if you have children, and things of that nature. So they that the form delves into deeply into your financial situation, and I guess I can understand why, because you are wanting to pay less than you actually owe. So the IRS wants to make sure that you're being legitimate about it. So again, with that in mind, that you have to submit the financial information, you may want to reconsider the offer in compromise. Also, too, it's a fairly long process. The IRS deals with offers and compromises on an individual by individual basis, so it's really hard to say how long it will take before they render a decision um, for the offer and compromise. But it does take a while. So some qualifications, or some things that the IRS considers when they're looking at an offer and compromise that's submitted by a taxpayer is the taxpayer's ability to pay, their income, their expenses, and other asset equity that they may have, such as stocks and bonds, or other assets that's not, liquid at the time. So, in order to qualify for the offer and compromise, you really have to be in a shape, whereas, or a financial condition, whereas that there is no other way that you can pay this full debt. Because if you have other assets, or if you own property, etc., the IRS looks at that as, well, you can liquidate some of those assets in order to pay them their money. So you're definitely, well, I'm not going to say definitely, but more than likely, they're not going to approve the offer and compromise if you have other assets that you can liquidate. So you also have to make sure that even before you submit an offer and compromise, you want to make sure that you're eligible, meaning that you're current on all of your tax filings and your tax payments, and that you're not currently in an open bankruptcy proceeding. These are things that will disqualify you from being considered for an offer in compromise. So, again, the offer in compromise is a way that taxpayers can pay less than the actual amount that's owed, but there's stringent requirements and rules for the offer in compromise. You can find more information on the IRS's website, www.irs.gov, and then type in offer and compromise in the search box to find out more information about the offer and compromise program. Now, when you're considering or when you're submitting the offer in compromise, there is a offer in compromise booklet, 656B, and it literally is a mini booklet, and it has the forms in it that you need, and it has general information in regards to what the offer in compromise is about, um, what's expected and things of that nature. So, again, if you do not have the means to pay your tax debt, you may want to look into the offer in compromise. There is an application fee for it, and there are two payment options. One, whereas you have to pay an initial payment of 20% of whatever the offer is, and then two, you pay the initial payment and then you make additional payments to pay the additional amount of the offer. So it, again, it does not have a quote unquote time limit on this as to when they need to, when they, meaning the IRS, needs to make a decision. It's on a case by case basis. So the offer in compromise is another way that you can possibly reduce your tax debt. It is not a way to get out of your tax debt. It's a way to reduce your tax debt only if you qualify and meet the stringent requirements to do so. So again, visit the IRS's website and type in the search box offer and compromise to find out more information about the offer and compromise. Now, granted, this is a detailed process, so there is the probability that you will need the help of a reputable, qualified tax professional to assist you with this. But this does not mean that you have to pay a mini fortune for this service. Any reputable, qualified tax professional, preferably in this case a CPA or an EA or a tax accountant, can assist you with the offer in compromise. And note that even if it takes a while for the IRS to render a decision and they reject the offer in compromise, none of the money that you've paid will be refundable. It will just go toward your tax debt. So anything that you pay while you're going through the process, it's not going to be refunded to you. It's just going to be applied toward your tax debt. So make sure that you meet the qualifications and make sure that you're current on your tax filings and your tax payments and that this is the route that you want to go. So I thank you so much for listening. And if you want more information on tax debt resolution or other tax services, you can visit my website at www.audiotaxhelp.com. That's www.audiotaxhelp.com. AUDIOTAXHELP com. Let us know if we can help to make your life a little less taxing.